Have you been looking into HELOCs but don't know which lender to go with? Well, this video is for you. In this video, I'm going to share with you the top lenders to go with here in 2022, what to look for when you're shopping around, as well as how to pick out the best one just for you. What is up, everybody? Jay Costa here. Welcome back to the channel. If you get any value out of this video, please hit and smash that like button down below. Also consider subscribing if you want more information like this. Now onto the video. As stated in this video, I'm gonna go over the best home equity line of credit lenders for you to choose from. Now, I've been asked to do this type of video for a long time, and I honestly didn't want to because, frankly, there isn't just one best HELOC lender. You see, what is good for your situation may not be good for my situation, and vice versa. Plus, a lot of what all of these lenders offer to people depend on so many different factors, like what state you live in, what your income is, what your credit is, etc., etc., etc. But what I will share with you is some tips on how to find the best HELOC just for you, as well as how to get a discount on the APR rate for your HELOC, as well as share with you the top picks by everyone for a home equity line of credit lender here in 2022. First, let's get started with the basics. I did make a video previously about the basics of a home equity line of credit, as well as how I applied for my home equity line of credit. I'll put a link to that video up here, as well as in the description box down below, so definitely check that out if you want to learn more. But to get started, a home equity line of credit, or a HELOC for short, is basically a revolving credit line that a lender gives you based on the equity that you have in your home. How does a lender know how much equity you have in your home? It's very simple. They base it off the amount that your property is worth minus any liens like a first mortgage that you owe on the property still. So for instance, if you had a house that was worth $800,000 and you owed $600,000, that means obviously, very simply, that your home equity is $200,000. Now, does the lender give you access to the full amount of $200,000 through a HELOC? No, that would be too risky. What they base that off of is a loan to value, or LTV. A loan to value is exactly what it sounds like. It's the loan amount divided by the value of the property. Most lenders are about 80% loan to value, but some offer more, some offer less. We'll get into that later in the video. Keep in mind the specific rates as well as terms that a HELOC lender offers to you is going to depend on a few different factors. Number one, your location. Most of the best HELOC lenders and programs are offered by regional and local banks and lenders. So after you watch this video, go to Google and search HELOC and then your city or state. Most of the time, these local lenders as well as credit unions are able to offer you terms that the bigger banks just simply cannot offer you. Number two is your credit. Rates and terms of a HELOC will depend greatly on your credit history. If you have great credit, these lenders are more likely to give you a better rate as well as a higher LTV on your HELOC, or sometimes both. Number three is your income. Yes, your income matters with a home equity line of credit because these lenders want to make sure that you're able to pay these additional payments on your property. The better your debt to income ratio is, the more likely they'll give you a better rate and better terms on the HELOC. And number four is the type of property that you're trying to get the HELOC for. Most of the time, and most people watching right now are probably looking to get a HELOC based on their primary residence of a single family home. But if you have a condo or a townhouse that you're looking to get a HELOC on, there may be different factors involved in regards to LTV as well as rate. And some lenders even offer second home and investment property HELOCs. More on that later as well. So I'm going to share with you the most important factors when you're trying to decide and you're shopping around on a HELOC lender. Number one is the margin. Most of these HELOC lenders base their APR rate on what's called the prime rate, which is set by the Federal Reserve, plus a certain spread. That spread is what I'm calling here the margin. So as of right now, I believe that the federal funds rate is 5.5%. So if you go to a HELOC lender and they say that they're offering a prime plus 2%, that means that you're paying 7.5%, 5.5% plus a 2% margin. Now, this margin is going to vary based on the lender. So this is like the number one thing you should look into when you're shopping around for a HELOC lender. Obviously, the lower spread, the better, but that's not the only thing that matters when you're shopping around. Number two is the LTV, the loan to value. As stated earlier, the standard industry rule for loan to value on a HELOC is about 80%. Some are a little less at 70 to 75, and some are up to 90%. Generally speaking, the higher LTV, the better, but Usually the higher LTV you get, the higher interest rate you're paying as well. So keep that in mind. Number 3 is the appraised amount. So I'm gonna share with you what I did when I was searching for my HELOC. I actually applied to a few different lenders, and all these lenders had at no cost to me, had appraisers come to my house and appraise the property. And between all 3 of these lenders, each 3 appraisals came back at a different amount. So obviously the higher amount that the house is appraised for, the more you're going to be offered on the home equity line of credit. Number 4 is fees. Now, with HELOCs are generally much less in regards to closing costs and fees than when compared to like a cash out refinance. There's really generally no closing costs at all. At least I didn't pay for any. Sometimes maybe there's a $100 application fee or something like that. But some HELOCs do have an annual fee of anywhere from $50 to $200 per year. And a lot of HELOCs as well have early termination fees, where if you close out that HELOC before a certain period of time of about 2 or 3 years, they hit you with a early termination fee of probably about $400 to $500. Now, in reality, are you going to close out your HELOC within 3 years? Probably not, unless you actually sell the property. If you sell the property and that second lien has to get closed out, that would be terminating the HELOC, and you would be responsible for paying that early termination fee. Another thing to keep in mind when you're shopping around, your rate, your APR may differ with the same lender depending on how much you're looking for from the HELOC. For instance, a lender may offer you prime rate plus 1% if you're only looking to get 50% LTV, but maybe the rate would be prime plus 2% if you're looking to get 80 or 90% LTV. The higher LTV you get, more likely they're gonna charge you more on the APR. There's no real right or wrong answer in regards to this. You're just gonna have to figure out what you plan on using your HELOC for and find that happy medium for your own situation. Another great tip as well when you're shopping around is that most of these lenders want you to sign up for other accounts other than the HELOC. And in order for you to do so, they'll offer you, a lot of the time, a discounted APR. For instance, my own bank offered a 0.25% discounted rate on the APR of my HELOC if I just simply opened up a simple checking account with them. So when you're shopping around, definitely ask all these lenders if there's any way to get a discounted rate by opening up any additional checking accounts or savings accounts or brokerage accounts or whatever else you're looking for. So there really aren't any specific top lenders, but here are the most common lenders that I've come across on the internet and the most suggested that I've seen. Number 1 is PenFed Credit Union. PenFed is the most commonly used and suggested credit union in regards to HELOCs on the internet by far. It gets great customer service reviews and they offer up to 90% LTV. Also, they offer HELOCs based on investment properties. That's not always the case with a lot of these lenders. So if you're looking for an investment property HELOC, PenFed is your go-to HELOC lender. But one potential negative of PenFed Credit Union is since it is a credit union and not a, other sort of bigger financial institution or bank, it can take a little bit longer in order to close on some of these HELOCs. Some people say that it takes up to 90 days, where a lot of these lenders will get it done ASAP. So if time is an issue, PenFed may not be for you. Number 2 is US Bank. A lot of people online have suggested US Bank as a general, overall best HELOC lender in 2022 because of their competitive APRs, as well as the fact that they have zero closing costs. But some don't like the fact that you have to pay a $90 per year annual fee if you're not a member of US Bank. Now, what being a member of US Bank is, I don't know, but you definitely have to check in with them. Number 3 is my lender that I decided to go with, and that's M&T Bank. M&T Bank is not available in every single state, but it is available here in New Jersey and most of the Northeast states. I have nothing but good things to say about M&T Bank. Their LTV was not the highest, but it was 86%, which is higher than the standard kind of 75 to 80%, and their rates were very, very competitive. So I figured the higher LTV, very competitive rates, it was the best decision for me. Also, a lot of the reason why I went with M&T Bank was because simply their appraiser appraised my house for more than the other 2 banks that I spoke with. So I had a good LTV, a strong APR rate, and a high appraised value, giving me access to the most amount of money possible. In addition, they gave me a 0.25% off of my APR if I simply opened up a checking account with them. Number 4 is PNC Bank. PNC Bank is a smaller regional bank that is really good from what I hear if you're looking for only a smaller amount of a HELOC. Their minimum HELOC amount is generally lower than some of these other lenders. You can just get a $10,000 HELOC amount if you want. So if you're looking for, 10 grand just to like kind of half redo your kitchen or a new bathroom or something, PNC Bank may be the best option for you. They also give you the ability to switch from a variable rate to a fixed rate, but they do charge you $100 for that, so keep that in mind. Their LTV offer does depend on the state that you're in, but it's generally higher than the standard 80%. They also offer an introductory rate for 6 months of 2.99%, which is crazy good. And just like M&T Bank, they offer a 0.25% off your APR if you open up a simple checking account. And lastly, number 5 is Bank of America. Everyone's heard of Bank of America. Bank of America offers an 80% LTV, which is the industry standard, and a pretty competitive interest rate. But if you're part of the Bank of America Preferred Rewards program, you may want to consider Bank of America for your HELOC because they give you a bunch of discounts if you're already a member and a customer with them and you already have checking accounts and brokerage accounts. A lot of this depends on how much you have in each account, so the amount that they discount the rate can vary. But if you use Bank of America for your banking, definitely maybe go to them first. See what they offer you based on rate and LTV. Have them send an appraiser out and see where it leads you. They also offer HELOCs on secondary homes. I don't believe investment properties, but secondary homes like a vacation home, which most lenders don't do. So if it's for a second home and you use Bank of America, check them out for sure. That is it for today, guys. I hope this video was useful for you guys looking for a HELOC lender. If you have any questions, let me know in the comment section down below. Or if you have any feedback, have you used any of these banks? Have you used another bank that you've had good or bad experiences with? Let me know in the comment section down below. Love to hear from you, and I'll see you next time.